But Gautam Sinha Roy, who is the VP Fund Manager at Motilal Oswal AMC, he joins us on the show right now to chat about what the market is up to right now on Street View at lunch. Gautam, hi, afternoon. What is concerning the markets? It seems like it's the global mood which seems to be tempering us off late.
Yes, absolutely. Actually, if you see off late, I'm talking more from a 3-4 month perspective, India has simply stood out in the emerging markets pack, both from a currency perspective as well as a market perspective. We have seen crashes, falls happening all over the globe, right? So far we have been pretty stable. That's very good. But if the entire emerging markets pack is seeing some sort of action, you would expect a collateral damage somewhere along the path. So that's not surprising, but that's not something that as investors you should be very nervous about either, because probably that throws an opportunity to invest freshly, especially if the correction is sharp. So that could create fresh opportunities for investors to get in.
Okay, and speaking of sharp correction, that's exactly what we have at our hands at the moment. We're sub 8,400 now in trades. It's a deep gash indeed. And take a look at the currency. That too is adding to the selling pressure. Banks are falling like a pack of cards. You've got the entire IT as well as metals basket looking exceedingly volatile in trades today. BOB in fact tops the charts. Otherwise there's Cairn India, PNB, and in fact it's the real estate index as well as the metals index which are down in trades. But Gautam, which brings me to my question of, some of these high beta pockets that in this market volatility have only been seeing intensified selling pressure. In light of the fact that it was an absolutely abysmal earnings season for the metals sector on account of the crash in commodity prices, how is it that you would advise investors who have already parked their money into this sector to approach the space?
Yes, the metal sector is especially vulnerable to the global worries because, metal prices are coming down globally, and there is a whole likelihood that, excess supply, especially from China, could get dumped into countries like India. So this sector is vulnerable both from a overall global supply perspective, because the supply chain of this sector is global, and the demand environment is also not really that robust, right? We're not seeing too much of investment cycle activity happening in the country yet. So I think a bit of a double whammy impact for this sector from both the demand as well as the supply side. So best to probably, stay away from the sector as such. But within that, if one finds some very good value opportunities, that is the only place probably that people could invest in. Depending on whether one sees enough value in some of the select stocks that are there.
What's the view when it comes to the pharma space? Because while that has been a sector in demand, we are seeing a turnaround for stocks like Lupin as well as Sun Pharma. Things certainly improving. Do you think that the lingering worry with respect to import alerts, etc., continues to weigh down on investors' minds?
No, actually, I think a lot of the import alert and US FDA related concerns are already in the stock prices, have already happened across companies. Today there will hardly be any pharma company in India. Even Mylan India facilities got some warning letter last couple of days back. So there will be hardly any India-based facilities which would not have seen these issues. So I think worst of those issues are probably over. Probably now we are seeing these facilities living up to the heightened regulatory standards that are there from the US FDA. So right now is a good time to look at opportunities. We are seeing that fresh spate of approvals are coming from the US, right? And that pace is picking up by the week, or if not by the week, then at least by the month. So that's a very heartening thing that is happening, that, pace of approvals is picking up, and that will create good opportunities for growth in the US generics business for most of these players. Also, the India part of the story is something that one should not ignore. So is the branded generics opportunity in the rest of the world, emerging markets especially. So this is a very structurally strong sector, Indian pharma I'm speaking of. So it's a very interesting sector. One should remain invested in the sector.
In fact, there is some news as well coming in on your screens, this pertaining to the oil and gas space. The government apparently, this is as per wires, by the way, news rise. Sources say that they're considering raising the excise on petrol as well as diesel. And in terms of the price, the government is mulling raising the excise tax by about 2 rupees per litre. This is on petrol, and by about 1.25 rupees per litre on diesel. And this is going to come as a bit of a setback when it comes to the oil marketing companies that have already undertaken some cuts with respect to diesel and petrol prices twice of late. And Gautam, just come in on how you see, the sector reading into all of this news. The government is estimating excise tax hikes adding about 5,000 crore rupees this financial year. Your view on the sector?
So the government, firstly, the government is, I think, mopping up as much as it can to, buffer its own kitty. That's good for the economy in general. But the sector is clearly seeing a good re-rating in terms of its earning power coming back. We have seen that in the earnings of the OMCs this quarter. Spectacular set of numbers. So I believe the oil marketing franchises are now starting to report earnings living up to their true potential. Which is a positive. Definitely there's a re-rating as such which is happening in the sector. The re-rating not just from a valuation perspective but more from a earnings potential perspective, because I think for the greater part of the last 10-12 years, when crude prices used to be high, their earnings were subdued because they couldn't pass through the high crude prices to the consumers. But that thing has begun to change at the margin, right? So I think it's a sector that one continues to be positive on, and in spite of the government taking a fair share of its kitty from the increased earnings pool, we still believe there would be enough left for the OMCs to report very good numbers.
Okay, government to decide shortly then on an excise duty hike when it comes to petrol or diesel. I just want to bring up that last flash. I mean, they are considering raising the excise tax on petrol and diesel, but I just want to talk a little bit more about the quantum, which is going to be 2 rupees per litre on petrol, 1.25 rupees per litre on diesel. But again, like we've been discussing, this is not something new. The government has done that in the past as well. Remember, the fall in crude prices, or rather the quantum of fall in crude prices that we've seen, the government has passed it on to consumers as well. And I think this move is going to help the government rake in a sizable chunk of revenues by way of collections as well. I'm just trying to catch that particular flash. It will just come off you on your screens. I think they're looking at raking in 2,000 odd crore rupees or so.
5,000.
I missed the 5,000 crore rupees. Yeah. So yeah, that's okay. That is on expected lines, definitely. So that's the news that we are just currently picking up. But again, it's speculative right now. It's just the fact that the government is mulling. It's coming on news wires and sources are indicating, so it's not confirmed
and
news
what
so
they're
far.
saying is that, they're going to decide on this only if the fact that crude stays below levels of $50 per barrel. So that too is an important factor to keep in note. They're going to decide shortly on the excise hike only if crude stays below that level. But moving away from that then, Gautam, let's chat a little bit about the earnings season that's gone by. Hits and misses, no doubt. What really stood out according to you, and which are the sectors in which you believe that we are going to see some prolonged pain?
So clearly the standout sector where OMCs, if you see, the year-on-year growth there in profitability has been stupendous. And this has been the second consecutive quarter when that has been the case. So that's clearly a standout sector. I think many of the consumer-facing sectors have benefited from gross margin expansion because of raw material prices coming down. That's also positive. I think PSU banks are still lagging on the other side, because in terms of NPA formation, probably they are still in the doldrums, not really getting out in a hurry. So probably a few quarters more of pain left there. So that continues to be the negative part of the earnings surprise. I think even metals, increasingly that's becoming a big worry sector for the country, especially the steel side, where we are seeing both weakening demand environment and supply coming in. Incrementally more and more supply is expected in the country. So these two sectors, I think, are the worry sectors from earnings perspective too, and we do not see that trajectory changing, at least in the foreseeable future.
Okay, good chatting with you. Thank you so much for taking the time out and speaking with us today. That's the view on the markets from Motilal Oswal. But let's shift back to the market and let's talk about some of the trading strategies. It's a good 1% lower for the Nifty right now. In fact, we're just about testing the 8,400 mark as we speak. A good 2% downtick coming in for the small cap universe as well. Ashwini, would you have any small cap ideas at a time when the small cap